still quite amateur.
Oh, that's learning.
All of that.
Oh, that's
So,
learning as well.
Yeah.
There's some indicators that I would like to install. I have a problem.
Okay, so that's good. So that's live.
Yeah.
Right, so to start off,
We're gonna master this. We're gonna master this.
so I think it's the first time?
First time.
I first time, okay. So usually we go through a three-step format.
Yeah.
So I think Rishi might do something similar. So we go through a three-step format. So one, usually a topic for the weekly planning session. Right. So this time around, I'll go with 4 types of entry. That's what I'm going to be talking about this time. Okay, 4 types of entry on any particular strategy. So we'll go through and we'll apply this to different. The second thing is that we usually look at application of this topic that I usually talk about in real time. So we can open up the charts. And then third, and then we can do Q&A. That's what we usually do. Okay. Cool. Right. Okay. If you can push the chair aside.
Yeah.
Maybe. Okay, that's very fine.
Where is your partner in crime today?
Oh, he's being a goat here or something.
Oh yeah. I like how you guys are so fluid and flexible. Yeah.
And the fruits about just walk with you guys, huh?
Yeah.
I think Joe is coming, I'm not sure, but anyway, she'll call us. So, before we start, you haven't done any trading in August, right?
No.
Okay. And so far, have you all opened up a broker account, placed trades? I know all trades.
Yeah.
Oh, yes.
Yeah, you trade. And do you Eamon?
Yeah, so I placed a dummy trade in August
Okay, that's good.
with Rishi, and then I placed 4 trades yesterday
Okay.
from the webinar. That,
Once you get the confidence, then start opening up a line account, really small account,
Yeah.
whatever it is.
Exactly.
Just start placing small, and that's small. You just get into the habit. So that's one. So most of you on the say, at least you all place a trade. That's good.
Yeah.
Second thing, any pressing questions that you have for me so far? Any big challenges that you have?
No, yeah.
Okay.
Yeah.
Okay, so we'll come back later.
Yeah.
Now, in the last seminar that we did, I think we did about Trader Crash. But in Trader Crash, all we talked about, you were there, no?
Yes.
Yes. So we talked about one of the elite strategies that we had completed research. So we took August some time off the research. So I was not in office a lot of time. So I was researching quite a bit to complete the research all. So we've completed that right now, and it's on dynamic breakout, so DBEB. So, and I've done a recording on it. That will go in the email, so check all your inbox for that email. So it'll be very good because it shows you how you, that's a research case study. And then finally you can then publish the trading system and then you trade live. Okay? And in Trader's Toolbox, Eva was there, I usually mention the 6-step process before you execute live with big money. Now the first step is always to have a trading system, which is your crib sheet basically, your rules for strategy, rules for entry, stop loss and target. With money management as well, okay? Very important, that's the first step. After you have that, then you go and backtest the strategy. So basically your hypothesis. It's just like conducting any kind of research basically, even in the pharmaceutical industry it's very common, or in the medicine industry it's very common. That we usually call hypothesis. Hypothesis means that saying that, you know, let's say men compared to ladies have got a lower risk of having heart attack until the age of 50. Now that's a hypothesis. And a hypothesis is usually formed out of just say rational thinking and out of observations. Okay? It's still a hypothesis, it's not proven yet. So in the same thing in the market, we form a hypothesis and therefore that crib sheet based on a concept. A concept saying maybe, you know, based on mass psychology, usually people run away when there is fear. And usually people will buy it when there is a lot of pleasure and greed. Okay? Concept, hypothesis. But over time, a lot of people have done studies and proven that hypothesis, so it's really not necessary to go and do experiments on that. So it starts with a hypothesis, then you form your crib sheet, which is a kind of hypothesis. Then you go live in the market, not live yet, so we do what we do with backtesting. So we don't want to waste our money yet, so we want to test if the hypothesis is true in terms of historical testing or not. So the same thing in pharmaceutical or medical industry, so they go through past research papers to see what they have found out. See whether if the results are not favorable, then we go back to the crib sheet and modify it, right? And then we go and test it back again. Now, once the results are favorable, then what do? We go to the next step. So basically, the first step, I'll tie it all in into here. So first step, we look at a drift sheet. Then we look at going. So this one will have your rules for entry, stop loss, target. Then with money management. Then the next step that we go back test, so historical testing, see if the hypothesis is true or not. Hypothesis. Then after that, we can stop. Once backtesting is favorable, if it's not favorable, then we go and fine tune this. If results not favorable, and then after the backtesting, then we apply it in real time. So we can test this thing in real time with a small account. A small account is anything up to £100,000. Anything up to 100,000. Up to 100,000.
Very small amount.
Anything up to, so you can start with £500, £1,000. Anything up to that level. Okay, I'll come back. I know what you're laughing at. Then after that, then we'll start with a like bigger account, and that can start anywhere from 500. Usually, it starts from £1 million. Then you can scale it up. £1 million and more. So that's how the process goes. Now, the reason for the historical testing is for you to build your confidence. It's first imprint. Remember that today you don't even think about walking is because you've done that so many times ever since birth. But the first time you attempted to walk, you did fall, all of us. Right? But we picked ourselves up and we kept doing it again and again until we don't even think about it now. We just walk. Right? So the same thing, the whole mind works with imprints. So the more imprints you put, the more confidence you get. And therefore then you can do it and reproduce it so many times until you don't even think about it now and you get into a spontaneous zone. And that's what trading in the zone is about. Mark Bergler, phenomenal book written. Now, 100,000 is small account. I know some of you laughed about it, but remember one thing is that this industry, this trading industry, the last thing you need to worry about is money. Because the challenge in this industry, you all agree with me, is to find reliable, good traders with really good amount of confidence and really good psychology and with good risk management. That's the toughest thing. Now, so therefore, if you can even prove that, if you can show proof of concept that you're a good, reliable trader who can manage money responsibly, even on a £2,000 account, even on a £10,000 account, I tell you, within 2 years, all the money in the entire world will find you. And in fact, even if it doesn't find you, you have so much confidence in yourself that you have now the skills to make any amount of money, especially in this industry where money is not the least cost at all. It's $1 trillion industry. So when we say after $100 is nothing, really been in the industry for a long time, $100 is nothing. It's just like dust. It's nothing.
It was one in terms of age.
Yeah, I mean, then we're talking about at least 20, 50 million. You know what I mean? Remember, you must expand your mind.
Yeah.
But the first thing you need to do is all step by step, right? You don't learn to run the day when you're born, wasn't it?
No.
There you go. Right? Yeah. Because after the imprints has been done so many times, then you get confident to run after you've walked. Yeah, so the same thing. That's why we always encourage you all. Because if you don't have much confidence, then you start demo. Start imprinting the mind, you know, just execute, get confident, get comfortable, you know. Then after that, you go to now, then you take the next one, then the mind gets wide up again. Then after that, then you get consistent with that. You see, in the book Trading for a Living with Elder talks about a 3-step process for a trader.
I put that mind testing right.
So it's a good book. He talks about a 3-step process of the goal of any trader. Now, firstly, if you have determined that trading is for you, the first goal is you're going to be here for the long term. I told this in the trader crash, wasn't it? Yeah?
Yes.
You're here for the long term. Remember that. You're here for the long term. You're here for the next 20 years. You want to trade for the next 20 years. Yeah, you're not here for just 1 month, 2 months, 2 weeks, 3 weeks. No. You're here for the long term. The second thing is your goal is to get consistent. Even with small profits, it doesn't matter even if you make 1% a year, even if you make £50 a year, it doesn't matter. As long as you get to consistency. That's your second goal. Is that when you look at your journal, don't care whether it was a loss or what, but you have traded every single trade according to those rules. Because the mind and the psychology uplift that you get is just incredible. No one can ever compare to that. Okay? And most traders will usually fail at the second step. Because most people cannot execute it consistently, not to see losses. Now the third thing then, is that then you then take it to the next level where you then concentrate now on maximizing your profits. Yeah. So 3 steps. So one is your long term. Second is that get consistent. Then it doesn't matter whether it's a win or loss. Third thing, then you then concentrate on maximizing your profit.
When you say maximizing your profit.
So you take it, if you're, let's say, making 1% a year, then take it now 20% a year. Right. That's what the third step as well, yeah? All gets on specific fine tuning of everything.
Comes with confidence.
Exactly. But don't you think that's the same process for anything in life?
Yes.
I mean, no marathon runner or no sprinter who Usain Bolt got in there just for 1 day of running. He got in there for the long term, for the training next 3 years. Second is that then he then imprinted himself that he could win at least one. Then after that, then he fine-tunes it, and he even makes sure that he runs the fastest amount of second and beats world records. This is the third step, you see. Right? The same process that you do anything in life. Now, oh yeah, welcome.
Thank you for sharing.
We needed some feminine energy.
Yeah, here we are.
What do you, Joe?
Yes.
Hi.
Hi.
How do you know?
How are you?
You said Joe's coming as well.
Oh, alright. And he remembers all the girls' names of the guys.
Yeah. It's got mine already.
Okay, anyway. Right, so I've talked about that. So you want to understand about hypothesis and steps, and you also understand about this and about imprinting. Now we come back to the topic for today, which is then 4 types of entry. Now, this hypothesis of 4 types of entry has already been discussed and already been proven, but not on every strategy out there. Now, I will now review to you what are the 4 types of entry. Okay. Okay, so what about that is on. We're just starting, Joe. You don't build over. You can ask me anything. So 4 types of entry now. The first one is called the aggressive. Okay, so 4 types. I talked about this in Traders Toolbox as well. Ego, do you remember?
Yes, sir.
What is the first type? Or anything that you remember.
My brain is going to land.
Or anything that you remember.
My accident.
No. What's the letter A?
You said
A, B, G. Huh?
Aggressive.
Aggressive. Did I mention this in the
No, you just came out.
Oh,
Like,
I thought you got it.
yeah.
Alright.
Yeah.
So the first one is called aggressive entry, yeah? Aggressive. What's the second one?
Seven.
Anybody want to have a guess? Oh, you've got a lot of trading experience, maybe you might know.
Yeah. That's I would say conservative, like conservative, but isn't that what that's
It's kind of right, but consider can be split into the next 3 entries, which is comes under that. Most specific.
risk adverse.
Anybody else? I gave you all the general knowledge of Traders Toolbox. What's happening?
Where is that?
End of control.
Control.
Okay, so the next one, some little bit of confirmation. So it's called minor confirmation. Minor confirmation.
So is that the second one, yeah?
Yes. So what your guess? The next one.
Major.
Very good.
I'm curious.
And the last one is the most. The last one is a bit tough to get. You all know which was the last one? Let's see if anyone of you can get it. People remember?
That's one. Major.
A lot of people were listening at that
You lost this man. I don't even know this.
It's been imprinted so many times.
You got to constantly read, because also remember we've come across quants as well. I mean, there's so much knowledge that we know that probably no one else has knows. And you constantly need to look at the screens. Even if you don't know any of this, it doesn't matter. But if you constantly look at the screen so many hours, you learn so much stuff. Learn what you do.
Yeah.
Why not? It's rewarding as well. At the end of the day, it's going to break you from this time of money that all of us really sick and tired of being. So what's the last one?
It's opposite to aggressive, so to speak. Passive or
You're getting that passive. Passive means what? You're getting free of
Oh, what the fuck? Oh, automated.
That's right. Automated means you free your time. So the last one is
Time.
timing entry. Time
Right.
based on timing. Okay.
Uh-huh.
Okay. Now let me explain. Some of you are like, what the heck is Steve talking about?
Yeah.
Right. I can see your expression.
Digital box, I know, isn't it?
Yes, sorry, single concept. Yes.
That's what else.
You're asking
It's not for the timing.
timing. And remember that, right? Now, just go through this. Right. So one way that we can do, I will give you two examples. So let's say we got price over here. Price. And let's say we got an indicator at the bottom. Let's say one of the indicators that you all know is what, stochastic. Familiar with stochastic, everyone? Yeah. Stochastic. Now, and let's say a stochastic has got 80 and 20. No. When the stochastic goes above 80, what is it called? Overbought, right? Yeah. And above the next one, when it goes below 20? Oversold.
Oversold.
Joe, you remember this one? Yeah?
No.
Oh, you said traders basically.
It's up to me.
So this is called, when it goes below 20, it's oversold. Now, one way we can enter the market, I'm just going to give you 4 examples. I'm going to give you another example. One way we can enter is based on indicators. We usually don't do it here, but usually never enter anything just based on one factor. I'm just going to give you an example. So one way that we can use is aggressive entry. Let's say now this is in, what trend is this?
Upward.
Uptrend, right? Uptrend means I'm looking for what kind of signals? Oversold or overbought? Yeah. If you want to buy something, you want to buy cheap or expensive? Cheap means oversold or overbought?
Oversold.
Oversold, right? Yeah, got it, yeah. Everyone got it, okay, that's good. So, just put it on here, okay? So, oversold over here now. So, aggressive, the first one is when, as soon as it dips below the 20 level, I buy over here. Aggressive, huh? So, you don't know how far it's going to go, but you just buy into the selling, okay? One. Now, 2, minor confirmation is when the first movement it just reverses this point here. Can you see? The first point it reverses. Can you see it's going up right here? Huh?
Yeah.
Right?
Yeah.
That's your minor confirmation 2.
Right. Yes.
3, major confirmation is going to be when it crosses above the 20 level. Now 4, what would it be? Timing.
Timing.
Let's see how creative you guys are.
So
That's a good question. Huh? Okay.
when you set,
No.
Timing.
is it when you set your own parameters?
It's got to be on timing, it's based on time. The entry is based on time. So what kind of room will you create?
When it's starting to go down, but with an indicator.
No? You're still not including time there.
Oh,
okay. Within.
Length.
No, oh,
Yeah. Bars.
It's got to be
10 bars.
for what? And what does it got to do with 10 bars?
It's got to bounce up within that 10 bars.
But start within the 10 bars. Okay, maybe that's would be one way.
Yeah.
Another way that you can actually see, listen, I mean, there's nothing wrong, we're going to test it anyway, but the usual one that they usually say, timing finally entry, is that this indicator has got to be above the 20 point for at least 5 days or so. Understand? So it's got to be around here for at least 5 or 6 days, you understand?
Right.
Then only I'll enter. Got it, everyone?
Yeah.
Yeah? Okay, so I mentioned it. Now, you must understand research and hypothesis is not like you can read. Let's go bring it to you. Research and hypothesis is not like it's the holy grail. It's not like it's got to be that way.
Right.
People come up with them, right? Discoveries are made. Isaac Newton found out about gravity, right? It was already there, but he found out about it. No. Thomas Edison did the same thing. He found out about light. He did his research and he found out about it. Right? So the point is to have those questions and then to research them, and then when it seems logical, then you then apply it. Another way also of doing it is by going on what other people have already researched, and you just execute. Okay? So that's why continuous you also must be continuing, oh, why is it done this way, why is it not, you know? How else can I improve it? Has anybody else done it? Has anybody else not done it? How can I improve it? That's continuously must be done. Okay, so these are the 4 things that they have done, which is very logical. Now, everybody understands this?
Yeah.
Okay. So, now, usual thing as I always do, if you all have understood it, that means you'll be able to answer the next questions I'm going to give you.
Okay. Yeah. Okay.
Okay. Now, let's apply these 4 types of entry to a strategy. And then you guys are going to tell me how are those types of entry and be tried. Or are they going to be, what are they going to be? So I give you the application. What are 4 types of entry?
Aggressive.
Minor. Minor.
Major.
Very good. Obviously. Now, we're going to apply these 4 types of entry on the strategy lift-off. All of you familiar with the
Yeah.
lift-off strategy?
Yeah.
Okay, so it's right. Okay, so that's good. 1% is not very sure, but all the other 3 are very sure.
Yes. Can we go through it quickly? Because I remember it's moving averages, the 20, 50.
Okay, who's very confident on the lift-off?
Yeah.
You're confident? Yeah?
Yeah.
Okay, so you can tell me now. So let's say we're going long.
Yeah.
Okay, one of you is going to long, one is going to short term. So let's say we're going long. Now what are the moving averages that we have firstly on the lift-off strategy?
20, 50, and 100.
20, 50, and 100. No? 20.
And 20 needs to be below the.
No, we're going long, right?
Going on. Yes, yeah.
20,
Long. Right, so it has to be below.
50, and 100. No? Yeah? So what else then? What's the next thing we need to do? So let's go long, right? So the first thing is 20 is going to be above 50 and 100. What's next? Yeah, set up. What is it going to do? Close below. You want to come and draw? Yeah, of course you can. Yeah.
So it's below 20.
So that's your setup bar, no? And then after that? So close above. Amazing. Thank you.
That's entry, yeah. Yeah.
Yeah? Okay, so now, so price is coming down here, right? So let's say, so price comes down. So that's your first setup bar, no?
Yeah.
Yeah. Let's see. Finally, then it closes. It's your confirmation. Then where's the entry could go? Where's the entry place?
5 above.
Of the
Confirmation.
of the confirmation. Bar, this is the confirmation bar. So once it's closed below, and what's the maximum number of bars it's going to close above? 10 bars, huh? Remember that, everyone? Okay. So now we are very clear about all this. Now, how would you apply the 4 types of entry to lift off?
Aggressive is when it dips below 20.
Okay, so why don't you all have a think and then write it down on your
Sorry.
pad, and then we will discuss it.
What was the academic question about? What was the stop loss again? 1 pip?
Below the low of the confirmation.
Okay, below.
What did you draw your cards as if it's going down?
That's what usually happens. You retrace this back now. That's what it talks about.
Trace it, then carry on. Isn't it? Are we doing up or down?
Up, long. So what have you got? Joe, what about you? Okay, what have you got for aggressive?
So aggressive is your setup bar. Minor is your confirmation bar.
No, just tell me the setup. So aggressive is where am I entering in?
So when you have a bar that goes related
Which is
to
your?
main.
That's right, awesome. So once the setup bar crosses below 20, you then enter. Enter long, right? As long as the 20 is above the 50 and the 100, okay? So that's aggressive, okay?
Right.
What do you do?
Since bar enters, I think maybe the same thing, since bar enters 20.
Yeah, that's right. Yeah.
I think it's better.
Well, yeah, it depends on how you want to enter it, but one way easily is the close. Right?
Yeah, because it could be spike.
Yeah. So you can enter on the close, okay? That's aggressive. Now the second one, so let's just put it over here. So the first one is going to be on the first dip, no, on the close. Huh? Next.
And minor is your confirmation bar.
The next one is the confirmation bar, minor confirmation. Just saying that. Okay? Yeah?
That's what you're saying first.
Confirmation, okay. What's the major confirmation?
No, what's the minor first?
Huh?
What's the minor?
She's saying the minor is the close above, right? Confirmation.
Okay.
What do you have? Minor.
Minor close above the
20.
20.
Okay, what do you have?
For the minor? The minor is when this bar in between the confirmation and setup goes below the 20, but above the setup bar.
Okay, that's interesting. Okay. Closest above the setup bar, is it?
Yeah,
Okay, so you want to see some kind of binding pressure.
exactly. So it's going up, but it's still below the 20.
Okay, fair enough. Okay. Okay, fair enough. She's got one. That's good, right? Minor confirmation. What do you all have for major confirmation?
Major above the minor ahead when it closes above the then major ahead when it's actually where we normally open our
Exactly. Yeah.
open
Fluctuation above the 20.
so my major
So what's the
is,
difference between the minor and the major?
major is closure.
It's the close above the.
Becoming confident. No, major is closer of confirmation bar. and major is above.
I don't get it, sorry. So
Let me show you.
yeah. You can just use the marker.
We're saying aggressive is closure down.
That's right, that's aggressive, yeah.
Minor closure of
Ah.
major, where we normally.
Ah, okay, fair enough, yeah.
Does that make sense?
Yeah, okay. You need a major, okay, you take out the high. Did all of you get
Yeah,
that?
take out the line.
Did all of you get that?
No, I didn't really see it, but I
So what he's saying is that aggressive you all understand, the first bit below.
can, yeah.
Then the next one, minor, is for the close. Once you close the verb, when you enter on the close.
Yeah.
The third one, major confirmation, you enter on the high of the bar.
I'm saying break of the bar.
Yeah. Which is a normal lift of the vehicle.
Oh, right.
You get what I mean?
Yeah.
So minor and major, the only difference is when you're entering. So basically, it was on the same bar,
Yeah.
but it's that minor is on the close, major is on the high of the bar.
Ends on the close, though.
No, but he's proposing.
Oh, right.
No, but this is the hypothesis. Remember, that's why I went through the four steps.
Yeah, yeah. Oh,
Yeah. No such thing as would you do it or would you do not. I mean, you have to see whether how the results are. No.
Yeah.
Right. Yeah. The last one, timing.
Sorry, no, I thought that the minor was the confirmation bar, previous bar, and the major was your first fill bar immediately after the
Yeah,
confirmation.
first one, green bar.
First fill bar, so when the students entering the trade,
Yeah.
I assumed that that would be a major.
Okay, that's great. So basically, you are saying.
It was type 1A.
Yeah.
1A, and it
So
was
you are
major.
saying that this could be the major confirmation, right?
Yeah.
Yeah.
Because after confirmation, this is the bar that
That's
told
fine.
you,
Yeah,
isn't
and
it?
then
Yeah.
your timing one would be any up to 10 bars.
Yeah.
Timing would be any up to
You know, we can have 10 bars included in a type 1B variation.
10 bars above what? 10 bars.
10 bars between set up and confirmation would be a timing.
So you want it to be below the moving averages, then? That's your timing. Okay.
Does it have to be above? You said it was type at 5%.
It's up to you. Now, let's now contemplate about all that we have got so far. Let's see if the thinking and the logic is correct. So now, first we have the aggressive. Aggressive, I think, basically it's you're buying when the whole market is selling, basically, right? Yeah, everybody is selling it, but you are believing that it's going to bounce up. You're not waiting for any confirmation at all. So it's as good as saying when the property market is falling and everybody's selling, won't get out, you go buy. It's like saying, the usual example sometimes I give is that, for example, if there is, if you're hungry, you're just about to walk out and have your dinner and there's a lion in that room, right? Yeah, what will most people do?
Right.
Will run. How many of them will stay and fight the lion? Maybe 1 out of a million, right? Maybe that. But then, but then the guy who is brave and he fights the lion and then he kills it, then what will happen? Everybody will come back and
Yeah.
cheer him up, isn't it? Right? And then he becomes the next leader.
Yeah.
Yeah? Did you see how that mass psychology works?
Yeah.
But you have to have conviction first. But of course, there's some guys who just want to be just act courageous and then get eaten up by the lion. Yeah, there's also that scenario as well. It's the same thing, right? You want to act courageous, you think you know more than the market, you buy and then keep selling and then you lose all the time. Right? Yeah? You want to be the guy who fights the lion and wins. Right, yeah. But to do that, then that's why we include probability. So therefore, however, the concept is that when the market is being sold, then you are aggressively entering, okay? The second thing is, so therefore, the first type of entry, aggressive, is early entry, but it's low risk. Low probability, or the real term that usually uses stands is low reliability. That means there's more chances of it going wrong, isn't it? Low times to get it right. Be a profitable trade, okay? So low reliability. However, it's got a high expectancy or high profit factor. Or profit. Yeah, exactly. All I'm saying is that if you were to take 10 trades, there's a very good possibility that 7 trades may hit your stop loss. So therefore, 70% you're losing, no. 70% losing, no? Only 30% is what? Winning. So therefore, it's low reliability. Right? Therefore, it's low reliability. However, the ones that win, because you're catching them so at a cheap price, probably catching it at the bottom of the turning point, therefore they can catch a bigger part of the move. So the 3 of them, or the 10, there may be 1 for you, each one of them may have run up to 3%. So 3% times 3 is 9%, and let's say minus the 7%, let's say all of these are stop loss, that is 2% profit still. That's why we say that it's a high expensive profit, so you're catching very cheap. That's the concept of this. So more or less the logic here seems to make sense. Okay, second is that we need a minor confirmation. Minor confirmation, you're going long, right? That means all I'm saying in other words, that means I need some minor confirmation of what? Which in other words means I need some kind of confirmation of buying. I need some kind of buying pressure to come back. So even had one suggestion, which was that close above that close, which is good. Another one is what? You just wait for the first green bar to appear. So this one's a red bar again. Then you wait for the first green bar to come, and then you start buying. So that would be a minor confirmation. These are all still hypotheses, suggestions. It's creative to see how many possibilities you can think. But of course, the more and more you read, the more and more you look at the market, then you have more plots as well to do it, and then you can test different variations. But of course, then you can also argue saying that when does the testing start? You can test for ages and ages to come. And that's where your rational thinking in there as well. See if it fits into the market concept. And as long as you then come out with one strategy that can make it consistent money, then just stick with it. There'll be so many more thousands of permutations, but you don't need to do that for the rest of the month. You're here just to make that profit. Keep it and maximum. So, the second one is minor confirmation. So the minor confirmation can be for the first green bar that appears, some kind of buying pressure, some kind of minor buying pressure to come in. Sometimes you can also link it up, sync it up to saying, I need the first buyer bar as well as the stochastic to turn up as well. Combining two factors, you see. This is why in Traders Toolbox we have different tools and how we can mix and combine to make that group sheet. Now the third thing is what? It's a major confirmation. So some of you also say, yes, it's going to close above, that's good. That can be a major confirmation. Or it also could be that you got to wait for the higher of that bar that's closes above. That could be a major confirmation. Right? So those could be one way, so that's okay. Now the last one is timing. The timing, maybe one way that you could do it is that I need the price to stay above the 20 moving average at least for 3 days. That's what you can do. Just one way. Now, once you have all these rules of entry written down, then the next thing that you do is also you'll come up with some kind of stop loss stop now. Right? So that's stop loss, then you also got then think of trailing stop loss, and then your target. Now, in terms of testing which entry is going to give you the best result, we vary the entries but keep the rest the same. So therefore, your stop loss rules, your target rules will remain the same. But then I vary the entry. So I can use entry number 1 with this, entry number 2 with this, entry number 3 with this, entry number 4 with that. Then I can then prove to myself from the market itself, not from anyone who is talking from the front or whatever. Now, what's the powerful thing here? Because you're testing yourself, you're seeing yourself, You're also understanding the strategy much more as well, huh? So that knowledge that sinks in with you, nobody can equal that. That conviction that you have, it just goes above the roof. It's incredible. But of course, you've got to put the time to it. No trader in his entire world, a professional trader who makes consistent return, has not been one who just spends like just 30 minutes on the market. No. In anything that you want to be a professional, they say the minimum number of hours, but the average number of hours is 10,000 hours. Right, so that's what you can do. Now, so therefore, you have got four different types now, which I gave you all. So one is like close below. Second one is the first buyer bar to come up. Third one is close above, and the fourth one is 2 days. It's got to, or 3 days above the 20 moving average. And it's got to be above the 20 moving average. So this is the first day, this is the second day, and even if you have the down bar the next day and the third day to move it. Now, so the 4 entries you got. Now stop loss. Where do you think we can put our stop loss? Stop loss.
Well, whilst you're in the trade, you're looking for.
No, for this 4 types of entry, yeah. Where would we put your stop loss?
Oh, you know, confident.
No, but then how would you do that for the aggressive? Aggressive, you don't have confirmation.
Oh, listen,
For all the 4 types, remember what we're doing now?
yeah.
If you're having 4 types of entry, we're going to compare how they perform. But use us that type of stop loss and
So, but suppose you can just pick it and arbitrary.
okay, that's one way. What is that going to be?
You could decide the distance which is not less than the height of the last bar.
Okay, that's what you want to do. So you're going to put for the low of the bar.
Yeah.
Okay, so basically, if you have an aggressive entry here, you just want to put it for the low of the bar. Your stop loss very tight then, right?
No.
See,
No.
No.
I'm saying, when I say that an arbitrary figure is, whatever figure I take should be greater than the length of the bar. So I would put stop loss at the bottom.
At the bottom of the bar, you
You're
mean?
using the bar length.
Using the bar length,
Oh, you're using the high,
the high and low of the bar,
So basically, you can have something like that,
right?
and you're using the high and the low,
In the low,
and
that
that's
distance,
100 pips,
right? Then I put
and then you put it 100 pips.
That is correct.
Okay, that's alright. What's the logic behind that? Because remember one thing, with testing, we carried away, there's so many thousands of testing permutations. No?
Yeah.
That's why we put some logic behind what we're doing as well, so as to reduce the number of tests.
I put it, you think about it.
You see like that, because if you don't have any logic behind it, then any pharmaceutical or medical testing, I mean, you can test anything, right? I can go and test maybe what, a heart drug, maybe let's say for a rabbit or maybe a squirrel. Why? You only choose certain types of animals, isn't it? Huh? Because they have a similar physiological system. So there's logic behind it already. Because I can keep on testing, you know, for the rest of my life, but there's going to be something like logic. Huh? So what? So
Just say the moving average. Like moving average.
okay, good. So what would you suggest? So we have one closing below here.
So below the 50.
So just one moving average below the moving average that it closes below.
Yeah, cool.
Because remember, sometimes you can get scenarios when you get this, right? Where the 50 is here, no? 20. Let's say you did this, and then finally you dip all the way down and close below here, no?
Yeah.
You can do that, right? Yeah. So do you want to say that you want to put it below the moving average that you set up our closest below? So if it closes below 50, you want to put it at 100.
100, right.
Is that what you want to do?
No, but that'd be a lot of risk.
But how would you know? You don't know yet.
Don't know yet.
What do you mean by too much risk? You're going to lose only 1%. What you're saying is your trade risk. Because your trade risk gets larger, that means your risk to run more to get the percent. You see, all this terminology almost get very clear.
Yeah.
Because if clarity is not there, you cannot achieve your goals. Same thing in life.
But then still, how can we have the same stop loss for different entries? When in fact, one is.
Good point, yeah, you can't have the same stop loss, but what you can have is a standard rule that is applicable to all of them.
Okay, alright.
Right, okay, yeah. So that's what I'm saying about.
So that,
So that's one scenario.
So this is a good one that can apply to everything, because what Earl said is that have a stop loss which is below moving average that the setup bar closes below.
Yeah.
Let me explain. So in this example, this setup bar closes below 20, right?
Yeah.
So therefore, I put my stop loss below the moving average is below the 20, which is 50. In this scenario, where now it drops below the 50, I would place my stop loss behind the 100. Now, Here's another question. What if it closes below the 100?
Then you think of another scenario.
What's that? Then you have to put a rule saying in case it goes below the 100,
Yeah.
then we put it behind the last swing low.
That's me, right.
So for example, like this, right? So it came down and then your 100 is here, and it closes below the 100, I put my stop loss. See what I mean?
Yeah.
So all angles are covered to some extent on the hypothesis
Yeah.
and not still confirmed right or not. Okay. So for again,
Why you would just guess at everything like that? Why would you not just look back at what's happened?
you can formulate your rules for doing that as well. That's another way. You can go back in historical and see what the price has done, then formulate your rules as well. Another way of creating a hypothesis.
How the market, how the market reacts to a certain pair. How aggressive it is, how many points spread,
You will, and that's why usually in our research templates you will see that we have an ATM. That's what you're saying basically it's currency dependent, isn't it?
Yes, yeah, constantly. Yeah.
So that's why we have, but you see, eventually what you want to achieve as a trader is very hard to adapt the strategy according to each currency,
That's not, yeah.
right? It is good, you will find some characteristics, but even it's the same thing in the pharmaceutical industry. It's very hard to develop a pill according to each human genetic makeup, am I right?
Yeah.
They want to do it, it's called pharmacogenetics, but it's still a very long way past.
You're really into the pharmaceutical.
Well, my background is pharmaceutical, right? Yeah. So you see, so in terms of the strategy, so to pertain to each currency is going to be tough, but what you can do is find out a parameter that can more or less pertain to everything, just like your medication.
Yeah.
So, based on that, your stop loss, like what Joe mentioned, is very good as well. You can see what the price has done before, and then you can formulate your rules, standard rule. Or else you can come up with something on a project, and then what will happen is that as you're testing it, you will see that you know what. All the 20 traces of tests, so if everything's sitting in stop or something wrong, you go back to your script sheet and edit it. But now you also got the market feedback. Right. Now, then how about then the target? So if you got one stop loss, one generic stop loss that you can do. Or another way that we can do it is behind 4 hour swing lows as well.
Yeah.
4 hour swing lows.
4 hours.
The 4 hour time frame swing lows.
4 hours.
That's, so moving average order 4 hours.
That's right. Also another way we can do also, we can use flip levels as well.
Oh, yes.
So the first one is moving up.
Yeah. Just a suggestion to just choose.
Oh, this is-
Think about it logically. What's happening in the market continuously? In terms of market dynamics, what's happening? So basically, you are having sell-stop orders over there, right? And people want to buy cheap, so they're buying it from them. People have gone long before, they put their stop losses in the moving averages, people are buying it. So all you want to do is buy it there, where most people sell stops are. Your stop loss, where people wouldn't usually do it. In the market could have high probability of turning it. I think a good one to test would just keep your stop loss all behind 100. 100 moving average. You can do that first variation. Okay.
Would you say, Theory, that it's not high risk because you're only risking 1%? Say that?
Trade risk. So for example, your trade risk is what? Entry minus your stop loss, no? Entry minus your stop loss. Let's say you get 100 pips in trade 1. Huh? In trade 2, you get your trade risk to be 200 pips. Trade 3, you get your trade risk to be 250 pips. Now, in any of these trades, are you taking a larger percentage of risk?
No.
No, why?
Answer your question.
In trade 1,
Yeah.
in trade scenario 1, entry minus stop loss,
Yeah.
it's 100 pips. Trade risk. Scenario 2, entry minus stop loss is 200 pips.
Right.
Scenario 3,
Yeah.
entry minus stop loss is 250 pips. In any of these scenarios, are we taking a larger percentage risk or not?
No,
No, right? Why?
because we just saw all those sides.
No.
Because we don't know the,
Because you said it, what is it? Because we're taking that?
sorry?
You just said it just now.
No, I'm just saying you don't know the account, or don't know how.
Yeah, let's say you don't account, but the percentage risk you always would take is
1%.
1%. So
Yeah.
relative, irrespective of the trade risk, you're still going to take 1%. Only that your lot size is going to be smaller, right?
Yeah.
Yeah?
Only the water.
The lot size.
Lot size or your
Positions are.
your position size.
Okay, yeah. And that's what the calculator does. Calculates it based on that. Okay.
However, the thing that is happening is because my trade risk, if it's in scenario 1, how many pips was it? 100. Scenario 2? Scenario 3?
250.
Now, in all these cases, I'm going to risk 1%, and therefore our question size will get smaller. However, if I risk 1% on this, to make 2%, how many pips must I make profit?
200.
200 pips, no.
200.
That's 2% risk 100 pips. To make 2% of money, I wish to move 200 pips, no? Or in other words, if 100 pips is 100 pounds at 1 pound point, therefore I'll make how much? 200 pounds, that's all. It's 1 pound different. Now, if it's 200 pips that I'm risking, to make me 2%, how many pips must I move?
400.
400. And finally, make 2% here, how much must I move? 500 pips. So, you see, in the last scenario, it's going to work so much more to earn me the same amount of money in scenario 1. No. You get what I mean?
Yeah.
Yeah? This one only going to move 200 pips to give me 200 pounds, but this is going to move 500 pips to give me 200 pounds.
Right.
But your risk is still the same.
That's why the position of the stop loss is very, very.
That's right. But of course, that doesn't mean also that, just out of see logically, you just go for 100 pips. You might get stopped up much more often, right?
Yeah. Yeah.
So you're going to position in such a way that you get a sweet spot where there's a good reliability and there's a good profit. And that is the discovery that every trader goes for.
Yeah.
That's why you do your testing and you research the market. Okay. So, see if you guys, now you got the 4 types of entry, and you got a stop loss, and a target can be we can do this through arbitrary trades. Just to test the first one. But in our journals, you can test up 2 to 5% immediately. Because we got the formulas. Once you got, because we got the template.
That's right.
In the journal template that we have,
Yeah.
it will calculate from 2 to 5%.
Right.
Based on whether you're filling up the maximum column and all that. We can go through it. I've gone through some of you. Okay? Maybe, I think I've done some videos on the journal as well. To go through the journal, some videos in the journal.
Even if you run the journal,
Yeah. The maximum trade column.
Okay. To move the profit from 2% to 5%.
No, the journal itself will calculate for you everything.
Yeah.
If as long as you put in the journal what's the maximum amount the traders ran or something, it will make more sense when you look at the journal.
Okay.
But for now, I believe this is clear. This is one way that we can research. This is what we want to do for the next step. We want to upgrade the laptop. And for those of you who are interested to help us with the research, I think it'll be an awesome opportunity for you all to see the results by yourselves when you're testing it and your conviction will just go over the roof.
Yeah.
Right? But first get the concept, go through everything that I taught you today, understand what we're saying. And it'd be amazing if maybe 2 of you can work maybe on Excel first, another 2 of you can work on the next one, and at least you want each other to check the results for the first time. And we usually start small, you only do one currency first.
Yeah.
Make sure you get it right, and you check with us and you do the research with us, and then we then expand it over the other currencies. Any questions?
Yeah. So what's the assignment exactly? What is the assignment exactly? Go through the journal.
Go through it. Firstly, I would say go through everything that I've taught you today. And then draft up a rule sheet, very simple rule sheet on all types of entry, with a standard stop loss and a target. I gave you 3 types of stop loss today, no? But choose just one. The one can be just behind the 100 moving average. and behind the order, behind the last swing low.
Yeah.
So, you choose one, right? Once you build all those rules,
Right.
then after that, go through the journal template, see if it makes sense or not in the next session or the next one-to-one that you have with us. Then we can then go through how to fit it out. But discuss between yourselves like who you want to team up with, and if you all can come up in buddies or even in a group, I think it's easier for us to do it more faster.
Yeah. I mean, the major confirmation is very similar to the current strategy, right? So is there a
Good point. So we don't need to test that.
Yeah.
We already got results.
Exactly. So I don't mind looking at the minor confirmation. So team up for that. I think the ones that are worthwhile looking at. Aggressive you're saying is you're going to have 70% loss or 30%.
No, I don't know. I'm just giving examples. Every system will differ.
Yeah.
But if you aggressive, you can get it right.
Yeah. I'm gonna try it.
Suppose, but run through us first because I can fine-tune the rules so that
Oh, we can define the rules first. Yeah. Okay.
that'd be worth it to all of us.
Aggressive one.
Okay? Alright. I'll send out an email as well. I just got to get a few things clear on my side, and I'll send out an email to whoever wants to get involved in the research stuff.
Can you just recap on before again? Aggressive is closer to the setup.
Aggressive basically means what? You're entering into the market when the market is being sold off, right?
Which is
the law.
closer, just below.
In terms of lift on strategy, yes, it's one way. That's one way. No.
And the minor, when there's a green bar for the lift.
Yes. No. And there's a green bar. What's green?
And the major,
No, the aggressive one is kind of like aggressive. As soon as you
and
go
the
there,
major,
And the major is when it closes above, just like our but this time it's close above, not on the high.
close about.
So that one we haven't tested. We can see how much it goes. Because close above we don't do. No, we don't do close. We only do for the high of the one. So it'd be interesting to see if we enter on the close. But I've done that before. I think it does. Some trades are very profitable. As long as you can filter them more. It's usually the noise that eats up your profits. Because there's always know how to filter that noise. And then the last one is timing, so after 2-3 days.
But 2 or 3 days above the trend.
Well, timing can also be 2 or 3 days after it's below the moving average. Below the 20. Let's say after 5 days of being below the 20, I'm going to
Yeah.
timing can be done. For everything there must be a logic.
What was the journal you spoke about? I mean, obviously you got the journal.
It's a template.
Yeah.
It's the research template. You all have got it, right?
Yes.
You can share it with anyone as well. Yeah, I'm joking. You just right click and share it with me. Maybe you guys can't, because I'm making. I'll do it. Anything else? We'll go to the- Why don't we do a simple application of this? Open up your charts. Let's take out maybe euro dollar. Find out the first lift off trade point, and let's apply these 4 types of entry, and then see how we will have done.
$1.
Yes.
So come up for me for the results of 4 types of entry. So for this, very simple what we'll do is that we'll place the stop loss behind the 100 moving average.
Stop loss behind the 100, yeah.
Yeah, 100.
Euro dollar. I need to put the
And target is over 2%. So you guys can come up with what would the first trade would have given you in terms of this 4 different types of entries.
Basic question. How do I put the moving averages into the chart?
Oh, do you know?
Yeah.
Okay. mini coaching session.
Yeah. You learn by teaching.
Anyway. Alright, so let's just do
Again, what
let's
you have
just
to
do
do.
great.
The first trade, the first laptop trade was year 2014, $0.
Dat blijkt onwaarschijnlijk een beetje verschil.
Then you look at the four types of entry as we discussed and find out how much they revenue.
Zero USD.
Yeah, go to daily.
Got it?
Daily.
Right,
The
first
first
thing
laptop trade,
$14, $1.
yeah. Find out the four types of entry
Room 2.
Insert.
as we discussed and find out how much each of that entry would have made. Understand one trade.
Oh.
So the red one would be, to say, the red one would be 20.
Is red the usual color that we use?
I was brown.
I'll stop.
Oh, it was.
Whatever you
We don't know.
really want.
What the?
Let's do
You
five
use,
tips.
you
First
use,
time you want.
5 tips.
I want to use blue for this one.
Yeah, you can do that.
You don't get it?
Red for the 100.
No, I get
What
that.
is this red one here?
Click on that.
What is it?
Moving average 14.
So is your target still 3 pips above the top of that bar?
Right click.
So your target is just 2%. So you look at it.
I don't know how you get
Cool. Very
your
cool.
target and
So
actually
maybe
from just
So,
no
one
one.
of the cases.
We're not knowing. You know your stop loss.
Average.
But we're going for 5 pips below the 100.
Yeah. So you got your stop
That
loss.
is yellow.
Yeah.
You got your entry.
Yeah.
What's the entry?
Entry is the first one is what? What do we say? The aggressive.
That's the
Okay, so that
Red is my
one of those
button.
four is just the entry.
No,
Yeah.
red is your.
What do we say the first one is? The aggressive. First entry. What do we say?
It said
So close
just
below.
close below.
The closer, yeah, close of the setup.
That's the.
So the close, you got to close, the entry you got a stop loss, you can kind of trade this one. And then
Yeah, yeah.
See, the green one's 20.
This, do you look at this one in my phone? This is a problem.
Yeah.
You know, when I put the data thing here,
Yes.
and I go here,
Look. You're what?
But you look
You already,
both of them, my mark is doing exactly the same.
Why is that?
Well, just, you told me so well.
Let's say if you want to look at this, you want to look at any bar,
green, huh?
right? This one here.
Yeah.
I should be seeing
Look
things
very good.
here should first, behind one is that.
Yeah, right.
It's a good line.
What are the ones? The
What do you
lights.
see?
See here, it's more clear for me.
What do you?
Let's take this green bar, I want to see behind the door. And normally just go like that, it can, it's a
Yeah,
right
the same
anyway.
thing, you choose the high button.
properties,
1370.
and then down here it says grid.
Where was that thing?
Grid.
Grid, third one down.
Okay, that's fine.
No.
I'm going to January 1 again.
And do you use the candlesticks? Oh no, I don't want candlesticks.
So
Okay.
let's just change up here. Yeah.
Nice one.
Now,
Red
Yeah,
the
we're looking for the first bit of trade.
So we're just going to go long,
Yeah.
the go for each one.
so that one there.
Up one for the green,
Oh,
down
so
for
then-
red.
260.
Table.
Yeah, I remember doing this now.
Yeah.
Blue.
Six
It's
is,
not about.
you don't have to enlarge it.
F11.
F11.
You learned all of it, huh?
I learned it a week.
Okay, no, but I
No, no,
no, F11.
Yes, F11. So is that F11?
This one.
Max.
Come on, here it is.
That one, the
No,
cheeky
no, no.
below.
How would you know?
That's 1500.
Yeah.
So the high, well, I
So
think
it's
plus,
one.
the plus doesn't work.
No, there's this, the magnifying glass.
No, that's not, that enlarges dark.
Ah,
Right, see here on here.
Oh, you just trade, oh, you can't.
No, you see F11 watches.
Oh, you got the full screen going.
Full screen.
Oh, how you do it here?
There must
I'll
be,
be,
okay. Good to know that.
yeah.
Be aware.
So that's.
No, I'm not sure. What I usually do is, I'll close up all the side and it gets bigger, so.
Yeah.
So it goes down.
Well, you do F11,
F11.
and it gets to the whole screen size.
Yeah.
Oh,
So
right.
Just
if
we
that's
can
still-
put it down.
There must be a way, another view maybe, that you can,
Still
on
below
your view.
that would
But it's not working out, full screen.
And then
So,
that's the definition.
yeah.
So
So
the-
you're
There
okay,
you go.
when you show, when you do the
Or
time,
you do
it's
some simple things.
Yeah.
20,100.
Very cool.
It's
I'll bring that.
20,100.
So USD, Euro USD is
So
going
we're
to
only looking for them in the right order.
We
Oh, this is the 100.
What is it?
You say 100,
template.
50?
Yeah.
Okay.
Same as the template.
Oh, cool.
You can apply that to every single chart.
Very cool.
We're going for the,
Call it whatever you want. This is why I've got so many charts in there, because you can apply it to each one there. So say, go to. Right, another.
That's the general template.
so that's the aggressive one,
As
isn't
like,
it?
no, this one, yeah. Yep.
Okay, well, sorry, GB.
Ah, this one.
Let's pay that there.
Uh,
Have,
Then got its usual format.
all you do
Lots
is
of
just
lots
go
of
to the template.
Go to-
It's going to be 100 EMA, that's fine.
You want to just go to this one. Oh, this is it.
So the aggressive will be below the 100 movie.
Yeah, one
No, we're good. So it's template. Oh yeah. E1.
100 EMA, that's fine.
Template. Got you. Cool. Nice one. Thank you for that. Put these.
I don't know what it's Let me just move this so that we can see behind it.
Okay, let's go through this example.
Yeah.
So the 100,
Right, so which list?
so did we say we go below the
This is going
100?
to be with this close
3611.
the 20. Yeah, 3. Yeah. That is the 11.
36,
Oh, sorry.
36,
I went 53 go below that.
So I see on mine, obviously.
Yeah. So, Cyril, what we looking for the actual trade? Entry, stop loss,
Yeah.
close to Joe.
Just find out only one trade, see
Yeah.
what the results they were giving you for all those four entry, stop loss.
All 4 types
what's
of
the
entry,
entry
but
on that?
and stop loss.
Yeah, of course, because once you want to know where they profit, how much profit they got.
Should we do it together, yeah?
Yeah, of course.
Okay. Close to the line.
Then we enter just 2 picks below the close, I see.
It's the entry.
For the aggressive, we're just entering when it's just close below the group number.
Yeah.
yeah, so what is our entry?
You look at 11.
The thing about this is it's the opposite to what we did there, right? You know,
1.368. That's when that increases.
Is it, is our entry the close? Or is our entry,
According to what he's saying, is we are going for an aggressive entry,
Yeah.
which means we will enter our trade once the red bar is closed. And in this case, it's on.
so we enter at the close, not at the
No,
low?
well, also as aggressive entry would be using the moving average.
No, that's for the stop loss. But what about
No,
the
entry.
Oh, for entry.
Yeah, where are you entering? Where do you
I'll still enter aggressive.
Is it at the close of the bar or at the low of the low? If one point.
No, the entry would be the same as what I lift off. 5.
No, on which bar? The normal lift off, we want
Yeah.
on the confirmation bar. But for this exercise, the entry will be on the setup bar.
Yeah.
So you think it would still be 3 pips above
Yeah.
the setup?
on the
Because that doesn't change. The entry.
Timmy,
Hey, happy
Yes.
How are you?
Help us, please, we are stuck.
It's not.
Oh, so.
So, stop loss, we've done 5 pips below 100 DMA, fine. what is the entry point? Is it
Okay, you see,
Close.
one rule whenever you do your research, you shouldn't see everything happen. Because you need to district in your.
Oh, okay. We waited to that function.
Yeah, because then always
we weren't looking ahead to it.
No. Your bias is switching, so that you always cover everything, because you're simpler to understand. And also it helps you with the numbers. So you see, the first so okay, no, not bad.
I think that's true.
You have to.
Okay,
I
that's fine.
understand, yeah.
So anyway, you got the close below 20,
Yeah.
right? So once you got the close below 20, then it's equals 10.
No, but is it actually, is it?
It'll be
is the
closer
entry
or the
below
bottom?
or
Yes.
below?
Yeah, is that all good?
On the close.
Then the second one is, I don't know what did I say.
Green bar, when there's buying pressure.
Yeah, but it's the first green bar, no?
At what point of the green bar?
All the close. Everything is close.
Okay.
For this entry is all the close. So here, that's the first one. Second, close.
So that one is F.
12, yeah, 1. Then in this case, the major confirmation is for the higher bar.
Okay.
Sorry.
Good on yours?
In fact, what they say got major confirmation, I say the close again, right? The bar that closes above 20, right? Everything's the close, no?
Who's on the day, right?
Yeah, it's one from the day, yeah.
No, no, that's you, so we,
You got
So
right.
in this example,
Yeah, so
where
it's,
is the
200.
entry for minor and major?
Every for the minor there.
No, this is
1.3.
200, 30, 10 and a 5.
so are we not doing the same rule of
It's the
like
brown.
below 100?
Yeah.
All
The
close.
first, the,
It's not possible, that's what you're saying.
Exactly.
Yeah.
In this
it goes above.
Yeah.
Yes, which is, I would say, is this
So
one.
every, yeah, the close.
So I just ask you a question. So tell me the entry in here for the minor and the major.
For the minor, 1.368.
Uh-huh.
That's minor.
Okay, and then why are you looking at that bar for the minor? Which one should it be? Yeah, that one.
Yeah.
This one, Joe, is
Close.
So that was a close it?
Yeah, yeah, so that's, all right, so that's the
Yeah.
second.
Yeah.
After I get wrong bar.
Okay, that's for the minor. Then the major,
Yeah.
Major green bar. So close.
Well, that's the minor and the setup.
No, no, sorry,
Sorry, that's the minor and the confirmation part, so it's the minor and the major.
Oh,
So our interest rate.
oh, so it's therefore it's the same.
Yeah.
Same one.
So, same entry.
Entry.
Yeah.
I'm not with you. I thought we were going on closer with the red bar.
So here we go.
It's not aggressive.
So it
This
moved
is
on to the
aggressive.
major.
No, no, he's just asking me
Major.
to make sure how much entry.
Okay.
That's good.
Okay, so that if you right for you.
Anyway, this one, so it's 40,
I'll do for you everything.
yeah, that's okay.
So, so we got 20 now. Right. It's for long, okay? So close below,
And this one, the white.
the first one, no, first one, the first.
I don't know why I jump all the time.
Entry on close.
You see, every time I do that,
Yeah.
Of the first bar, first bar, closes below the 20.
yeah, anyway, look at that.
Yeah, so our entry point, we're doing impressive stuff.
Which is minor confirmation, right? Minor confirmation can be anything like that. So green, minor,
Yeah, so this one here,
entry
Yeah.
on
This is still line.
of the first green bar.
Yeah.
Indicates what? First line.
there you go, yeah, okay.
But
Yeah.
And the third one,
we're looking at,
It's this one here. Yeah, I think look at that one, so basically you put the,
which is, so in
this one, yeah.
Yeah.
So you put the stop loss of 100.
stop loss
Yeah.
above that.
Yes.
Yeah. What would that be? No, but what would that actual number be? What would the number be? 1 point. Yeah, sure.
Oh, you mean price?
Yeah.
Yeah, right, okay, yeah, I understand. So it doesn't move.
It remains above the mean.
I don't know if we need to just write a rule or if we can mount up to.
1.36.
In short sense.
What
It's
degree?
fine now.
Always sharing.
It's 366. Have a 36669.
No, that's
Sorry. So first one is entry closed. Entry
Yeah.
2, 9,
You do the main order.
Yeah.
This is the entry.
Even and oh, are you all clear?
Can we go through it with you?
Yes.
You must be.
Joe, you've got all the photos. Can you show them?
You know, just photocopy and give them. Seriously, I mean,
Yeah, sure.
Yeah. Just show it to them for now. I think this is more simple. Or you can explain to them. It's explain to them.
Yeah.
If you still have any doubts, then you can.
Oh, right,
So
okay.
you can also ask.
action suppose the first one.
Press it. Entry on first. Close. Yeah. Close below. Yeah. That's cool.
Have you just got it on?
Yeah,
Historically,
What's the measure? What's the switch?
historically, you can't run.
we just started at the beginning of January,
Oh, right, okay.
January 2014. So we just right page 26. 26.
Oh, yes, I see that, yeah.
Sure, that makes sense, just for the
Have you got your phone? Just take it.
Okay. No, but then you've gone
No.
still there.
I'll take a picture and I'll send it to you.
It's. Should have it doesn't need to
So you
see.
can just write it down.
Well, I would like to take that.
Sorry, I didn't actually meet you properly, Jane.
Yeah, oh.
Actually,
Oh.
England.
Nice
Nice to meet you.
Straight into the-
I know you. sweetie. I texted you earlier. Thanks for getting back to me.
I texted you, but I didn't hear from you. I was worried that maybe I offended you.
Oh,
Because you text me, and then I said, oh, share me, I'm not coming with the 2 box. My
oh, it was
Okay.
sad. It was
No, no, no.
sad.
And then you didn't respond, and I thought I said wrong.
Hello.
I said, oh, my happy broken, you
Oh,
two
it
are
was
not
sad.
coming.
I know my sister and I laughed about that a lot.
That's all for that.
I think there's another 2 books at home. It's so important.
Is it heavy?
Yeah, there's so much in one day. Like when you were asking me, and it's not hard, but there's so much. But then again,
Yeah,
yes,
it's
one book is like that.
They really-
You go through it.
Sorry.
So yeah, just mentally fit.
Oh gosh, it'd be better to do a smaller amount.
Yeah.
Lots of way.
Or another way that I've adjusted was to have people send books.
Yeah,
Anytime you go through it. So but by the time we go to the 2 box, we're asking questions.
oh yeah.
Right? That's what I do.
By. It's frustrating.
Ooh, very exciting.
I'm learning this all the time.
It's in use.
On the road to mastery.
You can't have news for things.
Good?
Well, just take it.
Okay.
Thank you.
Sorry, I'm nearly there. Writing it down.
Can you see it? Probably.
No,
Entry on road.
I think maybe this way.
is that yours over? Is it your right?
No, no, right.
Siri. Siri.
Oh, so you wrote this? Oh, right, okay.
So did you send me a message?
I wrote it. Well,
Entry on road.
yeah, I sent you a message earlier.
When? I've just seen a message.
No, when I left work about 6:30, saying, oh, I'm late, I am late. There I am.
Yeah, I haven't. I didn't see. Are you going to change another on my perspective? Sorry, I didn't see that, didn't I?
That's okay.
In fact,
I thought you
so-
hadn't even started, even I was late, that's good. You were
what's the
chatting.
thought of us? Sorry,
You were chatting.
when you came?
Yeah, yeah, it's started class.
Yeah. But this one was off already.
Oh, I mean, we did, I don't know if we were gonna do anything different.
Yeah, we were.
Let's see if I can take
Numbers
it.
behind it, or
No,
we're not gonna do that now. The
We
rules.
have to be doing numbers. We are actually doing numbers.
yeah.
So you should.
I just saying this. Yeah, we started numbers, didn't we? But we did a different one.
Hmm.
We did,
July, and then we'll go to January.
yeah, but we were.
So then you can email it to yourself.
Yes, and then.
Oh, they found the long one.
Yeah.
Oh, okay, let's find the long one. Yeah.
Is it okay? Wanna go?
Yeah.
Going back to January.
So you got the 4 entries, the 4 trades?
No, we were just discussing the rules.
Oh,
Yeah, not much progress.
I thought you had results for me
We're not a
already.
spreadsheet already.
Huh?
We're not a spreadsheet.
Nice.
We're getting there.
Obviously, I'm good.
Everything.
Let's
This is
do
the last,
aggressive entry, we said
Yeah.
1 for the
Tell us the rules, yeah.
You going back to January, or?
So close,
February.
Did that already.
Actually,
6 or 6, minus
Yeah.
5,
There's one in,
and target.
there's one in April.
What day was it February? February. Sorry. Because I know you're going through that, sorry. I'll ask you later.
Target.
There's that times 2 plus
Yeah.
entry.
You said February 26th? Yeah.
Okay.
Sorry?
Oh, you will get the formula.
I mean, I've got.
But this is LTM.
This is-
This is a trading research.
Yeah, very fast.
So you ask me, give
So what?
straight away.
We're doing
Nice one.
13680. That's
1.36.
Do now, you know, as in every Dropbox, don't
1.366.
drag and drop into the computer. Everybody will use it. If you want to copy and paste.
74.
Yeah, yeah.
Yeah.
And 48.
By the way, that's a long trading day, huh?
Right.
Yeah.
Yeah, the reason why I'm saying that is because.
Okay, so shall we go through?
Yes.
Yeah, let's do it.
Yeah, 6 plus.
We can, find it.
What day? Sorry, what day are we looking at?
We look at the
We need to
26th.
check again. 8 plus 4 plus kilowatts.
Add it on there. Just do plus again.
26
1.3.
So what date is it? What's the first date of entry? What's the first date you got?
That's good.
I'm gonna, we'll do 26th.
What is the first date you got? What's the first lift of trade you got?
We're looking at
26th of February.
26th of February. Huh?
Yeah.
Oh, yeah, yeah, I'll see.
There's earlier one for the music or remember this is I was going to put that one off. We kept crossing the 50, you just.
We all are looking at 26th of February.
Yeah.
So let's go through that.
This one, looking at the right.
Okay. Sixth of February. Okay, great, awesome. So let's go through it, huh? Come. So you just go through one. And you can get it.
So I like to.
No, you can't. I'll like
Just check before chapter.
I know this, yes, that's really good. So I'm a night owl, so it's also a great content.
Yeah.
I'm very happy that such students. That drives me. Okay, good. So, what's the date? The date is 26th of February. 14. Okay, so that's lift off. Euro dollar. So, first entry we're looking at is the aggressive, no?
Yeah.
Yeah? So aggressive, we enter into the close as a closest below the 20, as long as 20 is above 1500, okay? So, what is the close number we got?
1.368.
Yeah, 1.3680. Yeah, everyone got that?
Yeah.
Okay, good. So
Yeah.
entries.
No, yeah.
Okay. So somebody else tell me where the stop loss. So stop loss we agreed that it's going to be below the 100. So what is the 100 moving average number? Okay, you can check it in your data windows.
3606.
No, the number is 3611.
3611. What do you have? What do you have?
No, it's the same, but it's subtracted 5.
Okay, that's alright. What do you have? What's your 100? No, forget about the number that he's given. Just give me yours.
Oh, I said 3608.
Okay, that's fine. Okay, that's good. And you, Evan?
I'm kind of lost, but I'm going to go with what he says.
Why you lost?
I like that. Everyone says.
He said it with more conviction.
Why you lost?
Because something's happened to my thing, and I'm just trying to figure out.
Oh,
You ever seen that before?
yeah.
Okay.
No, let's just choose a figure and go ahead. 36.
Okay, listen. Is it technology? Is it available? Technology probably.
No.
Okay, but let's come back to that later. Huh?
Let's keep going. Let's keep going. Yeah.
Okay, so now the aggressive, the stop loss, you all have, I see only 3609.
Go ahead.
Whatever the 100 moving average number that you're getting on data meter, let's go with what? What do you have?
1.3646.
No, don't minus it yet. Just tell me.
1.3611.
1.361. So you get 1.3611, we agree that we will minus how many pips? 5 pips, 5 pips below, right? So 1.360 minus 5 pips of that, right? 360. You just say it.
Yeah, 1.3606.
Got it, yeah? So we just 5 pips below the 100 moving average, right? Remember this number that you're getting, you just get it from data window, right?
Yeah.
We just put on the thing. Next, target. What's the target?
1.3828.
1.38. So how do we get this number?
Entry, let's stop loss times K.
Okay, entry must stop loss only.
It came to 74 times.
Yeah. And how do you get your target?
Once I'm like K plus.
Very good, yeah, awesome, yeah. So just that's 148, right? Yeah.
Should
So 1 point plus press, you get 3828. Is that right? Yeah. Okay. So okay, that's for aggressive. Now the second one, what is it?
Minor.
Minor confirmation, right? Okay. What's the entry then?
Uh, 1.3705.
1.37.
Every 5.
Yeah, 1.3705. Okay, next.
37.
Next. So minor confirmation, is everyone clear? What's the minor confirmation? Is when the first,
Green after the percent.
that's right, just first green bar. Doesn't matter if it closes above or not. First green bar. Okay.
So wait,
So that is going to be how much? What's the close here on what? 370?
5.
Right. Because it's a buy, so you always add two pips, huh? The spread, okay? So it should be 3707.
Yeah.
Because you're buying, no. Every price that you read on the chart is a sell price, okay? So if you're buying, you must add spread. So the standard one we usually add, we do research is 2.
But you didn't do that on the aggressive.
In the aggressive, yeah, that's the point, you should add 360.
Okay, always add 2 pips when you buy it. Oh, okay. Great.
So we added 3 of them. So we added 3 of them.
When you're getting mixed up is, I'm just adding the spread on the close. I'm not doing on the high of the bar.
Ah,
close, yeah.
Okay.
okay.
You see, there's two things always when you enter. I've done a specific session that you want to read back to. One is that you're talking about the cushion. The other thing is the spread. So there's two things we always try. The reason why you're getting 3 is because I'm putting a 1 pip cushion plus spread. Just go on Google and read interest spreads to get a better understanding. It takes a while before you can interpret that knowledge. Okay, good. Right, so now, market, this minor compression, so 1.3707. In fact, I think for this example, let's not add the spread. Now, let's keep it simple because the first one I can add, okay? Right, so 1.3705, stop loss? Same, right?
1.36.
Oh, 06 right at the beginning, you said.
1.3608.
Why is that?
How do you find the moving average?
Oh, it's moved up already. Okay, I got you.
It's 1.3613.
Okay, I got you. Okay.
Oh, you use the cross thing, right?
Yeah.
Okay, so
Okay, that's good, yeah. So then the target, Joe?
Make sure code on there. You should put a code on there, somebody steals your code and then
With the one is still going below the
Well, I think the time is low.
Yeah, all of them use standard. It's not a choice, just use standard below 100.
Right. I thought we were just doing that for the aggressive.
For all of them.
we'll move one by one there.
If you're using the standard stop loss for all the entries.
Yeah.
Standard, yeah. You get it? Or
So the 2% target.
what is that? What is really confused?
No, because I thought that put it below the 100 was just for the aggressive.
For all of them. All of them. Okay, standard. The only thing is, remember, whenever you're doing any research, whenever you want to find out which type of entry is the best, all the other parameters will be kept
The same.
constant.
Yeah.
Yeah. To the largest extent. That's why we have a generic one. But there will be certain situations where you want to enter aggressive, but it's still below the 100. So for those type of things, you also must add the parameter saying that I'll put it behind the swing low, nearest swing low possible. Or what we can do is that we can add a 200 and put it behind.
Yeah.
But the concept is that it's always below the confirmation bar. No, the setup bar, sorry. It's always below the setup bar and below the moving average rate close to below. That parameter remains constant. That concept remains constant. You understand what I mean?
Yeah.
Right? Okay? Yeah. No, everyone get that? I explained
Yeah.
that just now. no?
Why is it 3608 then? 6.
I just following from now on.
Oh, right, okay.
Yeah, just find it below the 100, that's what you get. Okay, target.
1.3899.
Okay, good. And the third one? The third one?
Major, actually.
This one is MIC minor. This one is major.
The same as this instance.
Same, yeah?
Would it actually be the highest?
No, we remember. Didn't she share with you the rules that I wrote down on the book?
Right.
In this example, the major confirmation and minor confirmation is the same entry. Okay. Because the next green bar, the first green bar that appeared, is also the first green bar that closed above 20 EMA. So in this example, it's the same.
Right, okay.
You got it, yeah?
I don't understand what's the same.
It's just the way it's landed in this scenario.
Oh, for this scenario?
Yeah.
That's right.
Yeah.
Okay.
Because remember, minor confirmation is the first green bar, isn't it? The close of the first green bar.
Yeah.
Major confirmation is first bar which closes above 20 EMA.
Right.
In this scenario, it's the same bar.
Um,
It's the same bar.
exactly.
So therefore, the close and entry is also. Okay, good. So therefore, the major confirmation is this one here as well. Okay, so, and then finally the timing, what do we get?
Entry of third.
We took the major already.
That one. The major is the same as the minor in this one. It's the first green bar. But this also is a confirmation bar.
1-3 turns to the third bar.
Just confirm
So
something.
the timing.
From my understanding, the
Timing,
target,
it's the
as Joe's calculated,
third bar.
is basically the 74 pips times 2, right?
Yes.
Which is not 2
Third bar.
seconds.
Okay, what is it?
One three five. Sorry. 3735.
37, is that right?
Close the third bar.
13734, but it might, yeah,
Yeah.
anyway, it's like, yeah.
1.37?
Yeah,
That's not exactly.
371.
Which report,
Stop loss?
The red one, because it's going above
Stop loss
20
would
EMA.
Stable than 36, sorry.
Yeah, 361. Yes, and not. Because the moving average just moves, right?
Oh, yeah, of course, yeah, yeah.
What have you got, Joe?
3617.
After what you got? 36.
Yes.
3617.
361. So minus 5 pips, 361. And the target?
No, 3617 includes the less 5 bits
Oh, it includes that.
on my
Oh,
adjust.
not odd ones, yeah.
Don't worry.
So it's 362. Basically, it's 3622 minus 5. Is that right?
Yeah.
Okay, and your target?
That's all right.
Yeah, 3617. I just
17,
keeping it constant.
117,
3617. 367.
117,
Yeah. 734 minus 617.
234.
Oh, right, okay. Is it? Yeah. No, he's
Just doing
right.
it by head.
I think he's right. Yeah, 117 and 234. 234 plus
3968.
13734 is
234.
3968.
396. Okay, that's good. So that's great. So you got all the different types of entry and stop loss. Okay. So which one hit the target then? And our trailing stop loss, we didn't discuss trailing stop loss, we just do it like the lip top, right? As long as the low of the bar is higher than, is away from the 20 moving average, 20 pips away, then we start trailing it behind that. 5 pips. So which one did target, which one didn't? Tell me.
Yeah,
Good question.
Sorry, can I just ask on the timing?
Yeah.
Is it up to 3 and then you just disregard? So if bars 1 and 2 are above the 20 EMA and the third one is below, you just ignore.
Yeah, you wait for the third bar to be above the 20 yen.
If the third one
Hmm.
closes below, does that mean you're not going to enter a timing?
Of course not, no,
Trade
yeah.
on this one?
You need to wait for the third bar to close above.
Yeah, but it has to be 1, 2, 3.
Exactly.
And the third one is.
It doesn't
If
even
it was
consecutively.
1, 2, and that one was below, you wouldn't do it.
No.
If it was 1, 2, 3,
The fourth one
fourth
closes.
one.
Then yeah, you're right.
But, see, what did you say? Which one hit the target?
You can put the line on.
Oh.
So,
What do I mean?
Yeah. After how many days?
so we're supposed to trade on each of those days, won't we? So we do the next bar, hit the target, one of that, get stopped out.
Yeah, basically you're trading a stop loss, see whether it stopped you out or you got your target, that's all. Look at it.
No.
What you don't get it?
So which one's hit the?
So, the best thing is just simply looking at the historical response.
The back, no.
Yeah.
You just need a hypothesis.
Yeah.
Creating the first increment, like, be confident.
Yeah, sure.
So which one hits the target then?
But you should know this anyway, though, right? It's basically
This
your
one,
entry
which
to
one?
see what happens.
Yes, yeah.
But yes, that's the aggressive.
Maybe I'm thinking too hard.
So which one?
You're entering it and then you see whether it hits stop loss or whether it target, that's all, right?
Yeah, right, okay, yeah, yeah.
Question for you, Al. How do I move to the daily view?
On this one,
The daily view in the chart?
What day of you? 2, 3,
2, 3. So no, I have to do it again.
Also,
Yeah.
Okay, guys, what we got?
Maybe, yeah. I don't know how all of those are split.
Yes.
Thanks.
What do we got?
So the aggressive would have triggered on the 6th of March.
Yeah, very good, yeah. So we hit our target on this one, no?
Sure.
We hit our target on aggressive. So this one aggressive will give us how much? How much did I give it us? Did I give it us?
2%.
Plus 2%. Or we call it 2R, huh? The R is the variable depending on the percentage risk. Next, minor confirmation.
561.
Twice the.
Oh, the R we usually leave it as a variable because the percentage risk can be variable. But you are right, if it's 1% risk, you are making 2%.
So plus 2% risk. Is that what
No,
you're
plus 2% risk. But usually, yeah, but R stands for risk.
Yeah.
So the 2R basically means if your risk is 1%, you make 2%.
Yeah.
Right? Okay, next. Everyone got it about this one?
Yeah.
No, okay. Okay, next. Oh, what's happening?
I just think, to me, this look like all of them are target.
All of them, really? Okay. No, but the second one was 3899, right? The target.
What do you get next one?
Yeah.
Oh,
So
right.
looking
so
for the high,
Eventually,
so here, you said
On the 6th of March, the highest ever hit was
So is that high?
3872 though.
At or above what could be.
So how could you pick the target on your second and
This one,
your second 3 and 4? You can't have that.
this one.
The target is much further away.
Still not.
No.
3899.
You don't get it.
no.
That was.
Why? What is difficult? You see, you entering on here, right?
That one was a 6. Maybe that's a 7.
The target is here.
I think it's yes.
T1, T2 is higher than this or not?
Yes, it's target, yeah. So,
T3,
it's,
T4, basically.
target is much higher.
Much higher. On the 6th of March, bar went up all the way to here and stopped here. It didn't reach T2.
No.
So on my first position, I've got out by 2%. On my second and third and fourth, it hasn't gone there yet. How can I get the money?
What doesn't it get there eventually?
Huh?
I guess so eventually.
Yeah, so on the 6th of March it doesn't, right?
What's significant? What's significant about 6 March?
Oh, it's the first target which was hit, the 6th of March.
Right.
Yeah, then go on to the next page and see if it hit the next target.
Right.
So you're not wrong in that, it's that eventually it hits it, but you need to give us the dates, right? But the first one which hit, the first date in which the first target was 6 March.
Oh, the first one, right.
Yeah.
Oh, we just give me the dates.
Yeah, we give you the dates, yeah.
Right, okay. Because I'm just looking at it, it's just not this, they hit the target.
Do you know why you're getting confused?
Yeah.
It's because you've not covered your screen. You're looking at all the data at once.
Oh, because you don't know the
That's
dates.
right.
That's what you just said.
This is
there.
what I was telling them. This is
Right.
this is where you get confused.
So, so look at that.
Exactly. Then you go one day by one day.
No, I understand.
It's always a reason why everything has
Yeah,
Actually, maybe not.
Because I like to say,
So you can move the chart to the right, so you can cover everything. Just move it. Just move your chart to the right.
617.
Just move it. That's it. Cover it all the way. Like the first day when you enter.
no, that makes sense.
Then you can click on F12. Then you can go one day by one day. F12, one day by one day.
Oh, is that like?
Yeah, yeah.
for-
Yeah,
for-
Mama,
I think
Mama.
it was in there.
Look. See? See, that's what all you don't need to spend 100 pounds on e-cig now.
So easy.
It's still don't believe it yet.
There you go.
I learned that, you know.
It does the job.
1, 3,
But I know
9,
what you mean because I was very used to e-cig as well.
Yeah. It's complex, so I don't use it.
Yeah.
That's how what it is now.
It's very simple, isn't it? Very simple, isn't it?
8th of May.
See, that's the job.
You know what? You know what's
It's quite exciting.
That is such a geek.
No, we haven't seen it.
locals, you can do the difference.
It's strategy I'm trying to test. To see.
Yeah, so
Yes.
slips for those.
It could be anywhere like this. Sorry. Well,
Actually, close to the views in US or is Euro USD?
but I bet you will come out straight.
News or something?
3-9, okay, yeah. So the next, so when was the next target hit? When was the next target hit?
The minor was hit on the 7th.
Okay, so minor and major on the 7th, right?
Yeah.
So we also got our 2% here.
Brown.
Yeah.
Or this and that. And then the last one?
The 8th of
That's why
May.
we went on and on. It was different.
On and on to the 8th of May. Straight through Easter. Straight out the other
3968, right? 3968, oh.
3968.
The target.
Euros for
Yeah.
Simple.
Oh, what's that mean?
Are we using simple MA?
No, but you are saying how long did it go to?
H of May.
No, but you see, remember, which did first? Your stop loss or your target?
We haven't hit any stop loss.
Where's your stop loss? Where's your trading stop loss?
0.3617.
No, remember, you trade your stop loss behind a moving average, 20 EMA, just like the lift off. Once the low of the bar is 20 pips
It seems like we're
away from the moving average, you stop trading it behind the 20 EMA. Exactly the same as the lift off.
Okay.
Exactly the same as the lift off.
So was the stop loss hit before the target?
Is that the same on all of them?
What do you guys guess? So you see, on 5th of March, you came close to your trading stop loss. You came very close.
Yes, yeah.
But you didn't hit it because if you look, on the 4th of March, the 20 EMA was 3710, so you basically 5 pips below, 3705. You came to 3706, so you didn't hit it, yeah? Okay, so tell me, so on the 4th one, what happened?
no problem.
Did we hit stop loss or did we hit target? Oh, come on, tell me. Did we hit stop loss or did we hit target at the timing of the last one?
On timing, what they do that?
Timing target is 3968.
We got 3 days. We have to do 3 days now. 3 days above the.
Sorry, still getting used to this. Be nice. Now we're done to. Where we start is.
You should do that with Aziz. It's up to you. Yeah.
It doesn't do it. It's 3 days.
1, 2.
Timing, no. Don't hit it.
So what do we hit then? Did we hit the target or do we just stop it? What do we hit first?
Oh, we keep going.
Keep going. Remember you were trading.
We think wanted to get above.
We hit the target by trading. What do you mean?
No, I don't mean the trading, but we hit the target.
We hit the
Think
target. What's the
about
target?
the above.
3,968.
Which date did you hit the target?
This one here.
We go quite far, right?
That's
That's our confirmation.
13.
What's the number you got?
So what's the high of that?
What's the high of the bar?
Yeah. 3965.
3965, right?
Oh,
No,
no,
that doesn't do it.
yeah, we don't do it.
Okay, so then what did we then hit? Just keep moving forward then, right? See what happens. Did we go forward to the target and hit it, or did we go to the stop loss?
Stop loss.
But because we've been trading.
I don't think
No, you
Step
don't.
back.
You see, again, you're getting confused because you're watching everything. You need to go one bar by one bar.
Right.
Also, you get confused.
That's our timing one.
Yeah.
We've entered there.
So move
We're not
back to the
going to
screen.
stop loss here.
Don't look at
Keep
or go back a bit. That's it, yeah. That's it. Now go one bar by one bar, see what happens. So you've not hit your target there, so keep going. Have you hit it? You're not, right? 3965, not right.
Yeah, so
3968 target. So you missed it by 3 pips.
that's right.
So go to the next day, see what happens.
Ooh, yeah.
Did you hit it?
Stop loss.
No.
No.
On the 30.
So keep going there.
Yeah, the movie stop. Yeah, stop losses.
There you go. Behind back, because stop loss behind the 20 EMA. Look, you're trading your stop loss behind the 20 EMA. It's the exact rules like the lift off. That means you don't know your lift off rules. Once, you see, this is the simple rule of the lift off is that once we enter here, whatever, once the bar keeps going up, once the low of this bar is 20 pips above this 20 EMA, we trade it behind the, stop to trade it behind the moving average 20 EMA. We stop to trade it.
That's every day.
Every day. Exactly.
Right.
Yeah? So which is the date when we got up?
When we go stop down to me,
19th of
19th of
March.
19th of
And at what level? So we need to go back to the 18th of March, look at where the 20 EMA is. Where's the 20 EMA on the 18th of March? What's the level?
Yeah. The 19th of March.
18th of March.
We go see 20
On 328. After Yeah.
3828 you got?
So bring it 5 pips below that.
Is it with 5 pips below 3828?
Yeah, so that would be 5 obviously.
What?
Easy
correct, yeah.
Easy correct. Yeah.
I'm getting a different one. I'm getting 3834. What do you guys think?
The one there, triple.
It's
So I was going to ask you, are we using simple luminescent or
exponential.
Exponential, yeah, still exponential, yeah.
Is it on the 18th of March you got that number? 18th of March. 18, not 19 and 18.
18?
What's the 20 year showing? Look at the data. No, don't video yet. Look at the data video.
Oh, yeah.
That's why you're getting this game. So look at the data.
Exactly. How did you do
So 3834 minus 5 is 38.
29.
3829. So the next day you get stopped on that.
I thought you could trail 20 pips below the 20 year, not 5.
No, you start trailing it once the low of the bar is above 20 and 20 pips. That's why I explained here. No, I explained just now, right? So your initial stop loss is, let's say, here, but once we get the bar moving up in our direction, and the low of that bar is 20 pips away from the 20 moving average, we move the stop loss and trade it behind the 20.
I thought it was 20 pips below the EMA, not 5 pips.
It never is 20 pips. Never will be. The 20 pips is only to stop the trading stop loss. As long as the high is. Yeah, go back to your.
So it's 5 on the long and 7 on the short.
You got 3 and 3, 4.
I think it's changed to 3 and 5. Look at the
3, 8,
latest.
2, 9.
3 and 3, 4. That's what I should be using. The data.
So 3834 minus 5, like what Joe said, it's 3829. So this one, we didn't hit the target, but we got out at 138. So how many pips of profit is that?
Oh, we got the course from the target, which was
3968.
in the entry, isn't it? Entry.
Yeah.
829 734.
96 pips, because
96.
100 pips is entry for the So 96 pips of profit. How much percentage is that? So how many percentage do we make?
20 pips.
Yeah, 96.
But did it make a profit? I mean, it's,
Because it tries
No, but it's not very entry level, right? Of course you made a profit.
It was top
No,
round.
because you got out at a price higher than the entry.
yeah, that does make sense. That's a good point. But I thought we didn't hit the target.
I'm sure we're looking for a beginning. 968.
Got you. Okay, I'm with you. Because how do we calculate the profit? 96 pips?
968 21. Sorry, 734.
So what is it? How many percentage, Joe? What's the percentage of profit you got? How do we, okay, tell me how do we find the percentage profit? How do we do that? Silence.
How do you do it?
Yeah, how do we find out the percentage profit? We got 96% profit, yeah?
Do the entry take away the
Yeah, carry on.
entry take away the
Stop loss.
Stop loss is good.
divided by
96.
96.
So the pips of profit divided by your trade risk, which is your entry minus stop. So what is it?
That's why I just trying to do.
96 divided by 83.
117. 117 times.
85, is it?
117 times.
It's 85 pips of risk.
85, yeah, 85, yeah.
So then 96 divided by 85.
1.13.
So that's your 1.1.
Uh-huh.
Okay, now the amazing thing is that now you got some stats. No, but it's going to be based on 1 trillion. Okay?
Right.
So we are now, you see, this is from yourself. You observe the market, not from somebody. It's different, isn't it? The conviction is very different, right? You've seen it yourself. Exactly into yourself.
Yeah.
So, okay, so can everyone listen up now, yeah? I'm just going to sum up everything. Joe, are you ready?
Yeah. I can listen to you.
Alright, you can do it. Of course, I forgot. Really guys not do that.
Oh, that's why I'm attentive.
Okay, so what we have now is 4 different types of entry. We've kept all the stop loss the same, which is beyond 100, and also the target the same. So only one parameter has changed. And therefore, in that, basically, in the first one we hit 2%, second and third we hit 2%, except for the fourth one we then didn't hit, and we only got 1.3 mark. But can we make any conclusion on all this?
No.
Why not?
Because you need to consistently go for the center for a number of trades.
Number of trades, that's right. This is what sample size.
Some,
What's the sample size here?
one,
One only, no?
One,
yeah,
Sample size is only one.
One.
I mean, it's not enough, no? It's like tossing a coin just once and saying that you want twice and saying that just 50%. It's not. No. Sample size must increase in your hypothesis perspective. Okay. So, I trust that we have delivered what I told you right in the beginning. So first, we went through a topic. Second is what we did. What is the 3 things I said in the beginning we're going to do? What is it? One, I'm going to go through a topic. Second,
application.
application, we've applied it on the market now.
Then
You've got a result.
No,
And the last one is Q&A.
we did that with the second.
But you can ask me any questions right now. Anything, it doesn't need to be on this, it can be anything.
So what number of sample, what's the minimum sample size you?
In when Kate talks about trade away to financial freedom, he says at least you need a sample size of at least 100 minimum.
Now the problem with that, for example, if you're testing a strategy on the daily charts, you may get 4 or 5 a month, which means say you get 7 times 12. So
But that's on how many currency pair?
no, if I'm testing one currency pair, for example.
Yeah, then you just test more. That's all.
What I'm saying, if I went through the testing, say the euro on the daily chart,
Then what can you do to increase your sample size?
maybe try another currency.
This one, yeah, what
But no
else?
value.
If you want to keep the same currency pair, what should you do?
Also your variables.
Huh? No, you increase the sample size. So it's not a good valid point, you only get 84 trades in a year. Huh?
Yeah.
So what are you going to do? Increase sample size. Sample size. See whether the strategy works on 100 trades. Oh, it's not a big rocket science question.
Also, so take over a year then.
Eggs.
Over a year.
Test
Because I was working on current of the year.
Usually what we usually do, we test for 3 years.
No, that's right.
3 years.
Yeah, can you imagine a DB lead, which is all complete now, I'm talking trader crash. I'll send the recording now. It was only me alone, I did it for 6 currency pairs over 3 years.
Wow.
Can you believe that?
Yeah.
Wow, you learn a lot now when you do that.
I've done so many of this.
It's actually 101.
So, how did you get the 85 again?
85?
Yeah.
Which 85?
Then the 85 then you divided by 96.
85 is a trick risk, entry minus stop loss.
No, it's 96 over 117. Fixed G7.
Is it not? 85 is 117. Your stop loss.
And
Well, yeah, you're right actually, the stop loss is 100. It's 117 now.
117, that's not good.
It's a good point. So 96 divided by 117, so.
I was mistaken. Yeah.
So give me 100, 96 divided by 117 is how much?
That's over 100.
Huh?
0.82%.
So 0.8.
That was a-
That makes more sense. 100%.
Let's see what I can do.
It's just the entry minus stop loss. 100%.
The initial stop loss.
What did you do? You did,
The
Down the other side.
it's not stop loss, it's
They
target.
couldn't show me something.
yeah, no, I did the one
So you posted that.
the trading stop loss, the one that we
Oh,
did.
right, no, yeah. Yeah, that's good.
Yeah.
Now I got it.
Yeah.
And slow down.
That's
Entry,
divided by, so divided by
All
50.
of them. Not the.
There's 2 questions I'll ask.
One more.
uh-huh. You're not, it doesn't matter.
It might help these guys.
Oh, yeah.
Yeah.
So you're just asking questions you're not related.
Yeah. I'll give it a try. Now, what's the difference between using a broker and going direct to the market?
Using a broker and going direct,
Yeah.
you, at this moment, actually none of us are very few people cannot go direct into the market. The guys who are direct in the market are those ones in the trading bit, New York Stock Exchange. These are the ones who are direct. They find the buyer's straight. So for example, even if you want to sell a property now, who do you go through?
Third party. Sorry, second?
If you want to, let's say, sell a property right now,
Oh, yeah.
who do you go through? Or it's called what?
It's that it.
STC?
Second,
No.
yes, yeah.
Do you know anybody that who just finds the buyer themselves directly? Very low, no,
Very
right?
few,
Not a
very few.
million or something, right? Yeah, very, very few, you're right. So usually the norm is that we go through an estate agent or middleman or broker.
Yeah.
But if you don't want to, you're going to go direct market, then either you will be a trading firm, you will meet those buyers. But today it's not possible because everything moving so fast, no? So that's why we get into this broker platforms online.
I really want to say this.
And they also made it very, very low cost as well. So it's like, you just think, what's the point of me putting all the hassle to find a buyer? You know,
Yeah.
it's a little cost.
The reason why I'm asking that is the difference between ETFs and
You see, that's a different question because ETFs is spread very
this is what I want to. This is the wrong question. So
yeah, and
this is what I meant.
this is a direct market access. So both are going through brokers. But the only difference is, you mentioned this in Basket.
Yeah.
The only difference is that it's the same as when you're going to bet on football. Huh? If I'm going to bet on football, I'm going through William Hill. Now, or you go in a casino, you're betting now. So once you bet and you win, whose money are you winning? You play blackjack, right? Exactly. So you play blackjack in a casino, right? 20 people. That's the dealer as well, isn't it? Huh? Finally, when you win, who pays you?
Deal.
The dealer. The dealer is part of the casino. It's part of the house, right?
So you're playing
So,
against the house.
so when you are playing in that casino, you're playing against the house.
Right. Okay.
So when you're playing in a spread betting platform, you're playing against the house, and the house is who this time is ETX. So
Yeah.
he's got a certain pool of money only. So whenever he's losing, he's going out of his pocket.
Yeah.
So it's definitely not in his interest for you to win.
Right. Yeah. So,
However, on the other hand,
well,
if you go through, let's say, estate agents and properties or whatever, their interest is just on volume. They only make their commission on the number of people they can match together. That's direct market access. Yeah. So the true way of making profit is by directly matching people, not volume. Did you know read the article recently on FXCM being fined about $5 million on stock market? Right. Yeah, you heard. Yeah, you saw that. But you know the funny thing is, they're not the one people. I'm sure they have more. But that happens anyway. But remember, but that's why at the end, the whole thing is a mathematical game, right? Yeah, you're not always depending on one trade. You got the highest probability over a large one.
So what it costs you more to go direct, work it through, say ETF, not that ETF are easy.
Cost you more? No,
Yeah.
same. Same spreads are almost.
Why would they go?
Why would you want?
Why would anybody use ETF? Go through spread betting?
It's because they don't know, right? I used to
So the other one's not.
Spread betting.
Oh yeah, that's right. Yeah, that's another good. That's another good reason. Because it's tax free.
Go through easy. So
Yeah, you got to ask your accountant about how to handle that process.
No, you have to direct.
have to do that. Oh yes, right. Yeah, the spread betting is obviously
But remember, I mentioned the three objectives right at the beginning, right? First thing, you
Yeah.
second thing, you go for the small profit. You see, that's the thing of the mind, isn't it? You always think very fast. You think that you're going to make £100,000 in the next year, then of course, yes. That's a big issue now. It's
Yeah.
large taxes. Yeah. Then you got to start thinking. But now you focus on the second step, and the third step, when you get to the maximum profits, then you see how it makes sense.
Yeah.
Okay.
There was one other one.
Yes, good. Just next question.
What do you buy the strawberries?
Oh, this year.
They're very good.
I see that the grapes are not popular, so we should buy
Zero.
more.
I want to walk in the life I have with Pepperstone. You know Pepperstone? Pepperstone?
It's so weird.
It's an Australian.
Why is that?
They wanted to charge me 3%. No, they've been recommended by people I was in. And when I tried to open an account, it's charging me 3%, and other brokers are actually giving me
Yeah, like,
an incentive. Then what should I pay? I was just wondering
in the
why.
beginning, just keep it simple, just keep one small broker, that's it, just keep one
Yeah,
small
no,
broker.
but this is what.
That's it, it's more than enough, and then just apply the strategy. As I said,
It's almost
three rules you got.
it's almost
They're all the
same.
same, three rules. Unless you started to trade 20, 30, 50 minutes.
That's different. That's different.
But let's go through the steps first.
Up to next year.
For next month.
Yeah.
Oh, something there.
Well, are you
And we
speaking?
start trading straight to the business.
No,
All right.
well, you may never know about this guy, so we start trading in the next month. Can't skip very much.
That's it. This is the advantages of holding a trade for, just an example here. I entered the trade, this is key, I entered the trade here, which was back in July.
Yeah.
And I held it all the way down
That's very good.
to about here.
Nice.
But because of the rolling daily, it takes so much of your profit away.
Is this friend betting?
Yeah.
Friend betting.
But how
What's
much-
the advantages of holding it for so long?
What's the advantage? Why did you see it? Every question that you ask, remember.
Love it.
You see, on deep contemplation or anything that we ask, that there's a few more gaps and you need to ask your question and clarify it before you can get a good answer. Most of the time we cannot find an answer because the question itself is not clear in your head first of all.
Yeah.
Now you see, you're asking me advantages for what? To make a profit or to make a loss?
Well, all I can see is
No, just answer. What's the advantage? What you're asking? Advantage to make a profit, of course, right? Yes.
Yeah.
So then profit is, how is it defined? Defined by where you exit and where you enter, no?
Yes.
Right? So advantages in terms of then how much percentage are you making? Let's say if you made £100, right? Let's say you made £1,000 after 20 days of being in the trade, but you're giving back £800 of it, £800 away. You're only making 20% of me, right?
Yes.
80% is going away.
Yeah.
So if I put it in that way, then immediately you can see it's not worth it. No, 80% is.
This is what I'm asking.
So, but then you're asking me without giving me the details, so I don't know any of that. So how much are you making? How much percentage are you going to give on commission? How much is remaining behind? See, this is what we need to know. No. Right, so you need to go and compute that and evaluate it. So find out how much you made, how much is giving on as commission. If you already have a 20% or 15% commission, is that a normal rate? Is that the usual rates that usually happen? Then inquire around brokers. And also, remember that just on one trade, we cannot decide that as well. On one trade, we cannot decide that. You need to increase your sample size and you get systematic. That's how we trade the conviction. That's how we trade. That's how we trade like
He gave you a lot of clarity.
a master.
He gave you a lot of clarity there.
Because that's the two questions I want to ask you before I got here.
I trust I've given you more questions to give you more clarity. Anything else?
So with the the trading stop loss, 4 trades that were put on the journal yesterday, are they going to be also be moved?
It will all be updated on the journal.
All updated
Based on the
journal?
rules on the drip sheet. If you have any questions, you can always email, you can always ask like.
Yeah.
You know when we set and forget, like the dollar yen skyrocketed. Now if I looked at it chart in the morning and wait looking in the evening, what if it just stresses? Wouldn't it be better maybe to check it so often? I'm just thinking, the quality of end day trading, so that you are not looking at the screen often. My question is, sometimes you have a shooting up,
Yeah.
in which case you need to adjust your stop loss accordingly.
But when does it say in your drip sheet to adjust your stop loss? When?
When we said that when the law of the bar is 20 pips above.
Yeah, but when do you decide that? At about 12 o'clock, in midday, or 10 a.m., or is it end of the day when you close up that?
Do you understand my question?
I understand that.
Frequent interval, for example, 3-4 hours
Yeah.
or something like that, frequent interval. But the question is, I think,
That's what I'm asking you back again.
What you have seen?
So you, all is getting used to it.
End of day,
Yeah.
doing intraday trading, then you can don't go not intraday.
You see, yes, think about it.
Stick with it.
Yeah, I'm being realistic. What I'm saying is, for example, the unit
Rush
dollar,
is something
it has moved quite a lot and it could retrace, but I will check it at the end of the day.
See, because
In
you
which case I could, okay.
see, when you check it, but you're also consistent.
Yeah.
You cannot check it sometimes at 10 a.m., sometimes at 3 p.m.,
Yeah.
sometimes at 9
No. In fact, the reason that I don't check it often, the very reason why I want them to trade, because I don't want to look at it.
You see, so therefore, just check it consistently. The reason why you get these questions, because sometimes you think, oh man, it moved so much and it came back so much down. Should I have moved my stop loss or not?
Yeah,
But remember, another thing that really affects all of our trade management skills is because of this visual point that we have, right? This visual, the senses, its eyes, always, the trick that it does on the mind is always looks at only one trade.
Yeah, it doesn't happen often anyway. I think that would be better.
You need to always start thinking and start training this mind to take. But if I did that over 20, 30 trades, what would the result be?
Yeah. Yeah. In fact, I should
You see, on this, basically, on this one thing we have, we are thinking the timing is the worst, but can we conclude that? No, we cannot. And we're also thinking on this one trade, that all of them are giving the same result, but can we conclude that? We cannot. The same thing the mind will begin to use.
Yeah, it doesn't
It was
happen.
not looking at one trade. But your eyes will always fool your mind. But through training of it, then your intelligence overrides the senses, fooling of it.
You know one thing that would scare me sometimes is going into see what fundamentals.
So you're not here.
No, no, it's okay. That's
What
like
feels you is that?
going into say looking at your fundamentals the day before
Right.
and thinking say like
If
today.
you're doing end of day trading, it really doesn't matter because your stop loss is far away. But if you're doing intraday trading, yes.
Right. But like today, just like, you know, shooting on quite a few pairs.
Yeah, but shooting is it to your advantage? It's
True.
have you got long sample size? Is it all even out? When you see your back testing, do you really look at news?
No? No.
How are you going to find out anyway?
Oh yeah, of course.
So you're going to go through Forex news, like history. Remember, this is a mathematical way of doing it.
Yeah,
There are
yeah.
good dynamics behind that. Well, I trust that I've talked too long.
No,
That's why some people are getting ready to go back.
That's nice.
Yeah, of course.
Because
You need to do the live trading with you as
That's
research.
all.
That's very nice. That's fantastic. Last question.
So I think it's
Your mind, look at it.
Yeah, no. And this one is?
I've got,
No.
I've got just one question for you all before you all go. I know some things, you know, you all are forgetting, you know, trade risk and all that, you ask basic questions, but why are you guys not coming on the live trading room regularly? Why is that?
On the webinar, you mean?
Yeah,
Every night,
Yeah.
9 p.m.
Yeah,
For me, it's time.
it's time. So you're watching the recordings at least?
I am.
I haven't been because obviously I've been out of it, but I will be.
See, that's the thing, you see, even though it's basics or whatever, if you keep around it, see,
Yeah.
one other thing also, I told this before as well, don't always, you know, like the normal average man, depend on the conscious part of your mind. Yeah? Conscious part of the mind means that means you're thinking that, oh, I've got to watch the recording, that means I need to have half an hour put aside to watch it. I can tell you one thing, that half an hour is never going to count. What you do is you activate the subconscious part of your mind. That means, what it means is,
Be there.
you just let it run in the background, you can do whatever that you're doing, you can be driving, you can be cooking, you can be talking to your friend, whatever. Just let it run in the background, your subconscious will pick the points, and at least you're always in that environment, very important. Yeah, or else you will never ever have time to do even a single thing. But that's not what life is. That's not what life
Even though you can hear it,
is. You know?
that's enough.
Are you talking about the recording or the actual?
Yeah, that's recording. Yeah.
Sometimes they-
Well, if I miss the live track, definitely I always look at
Consistency.
our laptop be present when it's
Yeah.
actually done.
But it's fine, really, as long as you're doing it, it's fine. Yeah.
That's all the last question. On the iPad, there's nothing on an iPad, but there's work on an iPad, isn't it?
If he's working on an iPhone, it should. Right?
What's on the iPhone?
The webinar.
Yeah. Yeah, you can listen to it. Yeah.
I'll try it.
Yeah, I know. That's
Let's do
also
that then. I'd like to know.
Kitten does it. Yeah. So
Maybe the
You're working on iPhone, huh?
Yeah.
Yeah, that's
I
what
can't
it
get on
says.
that.
But you cannot speak. We can listen.
iPad's always
Right,
Yeah,
okay.
so that's what it is.
So
Download
iPad often don't
the,
have
on the app or just on the browser?
Okay.
but you
Oh,
need
fantastic. Okay.
videos.
Yes, yes.
Yeah,
I have
that's
that.
Adobe.
I don't know why you can stop. I think
So download the app. WebEx.
I've done that.
Oh,
Have you
doesn't
done that? Oh.
phone
Right.
of Apple.
Can you call them? Call them.
They love helping people. Apple love helping people.
No.
They do, they're so
Oh,
helpful.
do they? Oh, do they?
Like the
Alright.
best customer service.
Oh yeah, they're really good at
They
it.
are. They do.
Because I must admit that one up because it's turning up and
Yeah, yeah.
No, but the
It should
iPad
be-
doesn't work in
should be
Flash.
that's really.
What is happening? You can't download the app.
That doesn't work.
It says, I've got the Flash,
Doesn't
not
have
the
Apple
Flash.
Player.
Flash
There's
tech.
no
Yes,
Apple
yes.
Player.
You can download the app, right?
I've downloaded the app, yeah.
You can download it, but it doesn't open.
Doesn't open now. It's about flashes. Yeah.
Did you go to the same issue?
iPads.
iPads don't have it.
Sorry?
It's a very useful session.
You'll find on your Mac.
It's about becoming more adult every day. Every day.
Same thing.
No, the
These are different topics every time.
old iPads.
Yeah.
You can't watch.
No, you can't do that.